Welcome to another video from amazedhd. There's this whole buzz about Bitcoin and cryptocurrencies, and many people are saying this is the next big thing after the internet.
We are entering a completely world of uncharted water right now.
Have you made any investments in Bitcoin?
So, I personally, I own Bitcoin in my hedge fund. I own Bitcoin in my fund. I own Bitcoin in my private account. It is a huge deal. It's a huge, huge, huge deal. Because what you're talking about right now is for the next 3 to 5 years, an unbelievably better store of value. It is gold 2.0.
I think this is a currency that's really going to work eventually.
Well, I think it is working, and there will be other currencies like it that may be even better. But in the meantime, there's a big industry around Bitcoin, and people have made fortunes out of Bitcoin.
Bitcoin, there is no Bitcoin company, there is no Bitcoin building, there's not even a Bitcoin server anywhere that you could shut down. It is completely distributed. That's what's unique about Bitcoin. It is, for the first time, a way for the two of us to exchange value online without a third-party intermediary.
Bitcoin is exciting because it shows how cheap it can be. Bitcoin is better than currency in that you don't have to be physically in the same place. And of course, for large transactions, currency can get pretty inconvenient.
Call here. In 10 years, what do you think Bitcoin will be worth? One Bitcoin.
Between $500,000 and $1 million.
But why was Bitcoin created and how does it work? In this video, we're going to discuss about why it was created and what problems it tends to solve. Well, to answer this question, I'll have to give you a brief history about the banking system that existed at the time Bitcoin was created and the problems that surrounded the system. Originally, people stored their money at home, and as people started earning more money, they began storing it in banks for safety and security. Banks kept this money, and since it was just stored, they realized they could loan this, make some investments, and give a part of the profit to the person storing it. This is how the financial banking system was established, and this went on quite well. But banks got greedy and used this money to give risky loans and investments. These loans are called subprime loans. They're characterized by high interest rates and poor collaterals. Since these loans could not be repaid, banks essentially lost people's money. They could not recover it, and many of them filed for bankruptcy. This caused the financial crisis in 2008.
Fell as if down a well, over 700 points.
Apple shares are just getting hammered this morning.
We're down by between 3 and 4.5% generally across these markets. Let's talk about the speed with which we are watching this market deteriorate. We're red everywhere, essentially, down by 4-5%.
We're down over 16%. Dow at the same time has fallen about 18%.
The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
The government tried to save some financial institutions by bailing them out. They ended up printing more money and essentially led to a drastic fall in the value of currency. To understand this, let's say you have $1 out of a total supply of $100. You have 1% of the total currency. The government prints $100 more and you have only 0.5% of the total currency. This centralized nature of money led to the financial crisis, and this is when Bitcoin was introduced. The timing was perfect. Bitcoin was invented by an unknown person or a group of people under the name Satoshi Nakamoto and released as an open source paper in 2009. To this day, we do not know who the mysterious founder is. Bitcoin aims to solve the problems that existed with traditional currency. The governments could print how much ever money they wanted, and there's always an uncertainty in the value of people's money. The conception of Bitcoin is peer-to-peer, and transactions take place directly, without any intermediary. These transactions are verified by nodes and stored in a public ledger called blockchain. Let me break it down for you. Bitcoin solves this problem by limiting the maximum number of coins and the rate of production. The code is also publicly available for easy verification. The rate of production of Bitcoins will constantly reduce in order to give an advantage to the early adopters, and also gradually increase the value of each Bitcoin. There will be a total of 21 million Bitcoins by the year 2040, and as of now, 1800 Bitcoins are generated every day. The next question which comes to your mind might be, who's going to receive these new Bitcoins? When you make a bank transaction, your transaction is verified and recorded by the bank. Thus, we need to depend and trust the bank for these transactions. The critical part of every transaction is ensuring uniqueness and making sure the asset is owned by one entity at any point. In the case of Bitcoin, the miners are responsible for processing and verifying the transactions. It is essentially a software which can be run on any computer. The miners are rewarded for offering their computational power, and more the computational power, the more Bitcoins are rewarded. Thus, the entire system is completely decentralized, and no single authority has control over it. Bitcoin transactions are collected in blocks and processed by the Bitcoin miners. The network produces a block on an average every 10 minutes, and the number of Bitcoins generated per block is halved every 210,000 blocks. The current reward per block is 12.5 BTC. All the transactions are maintained in a distributed ledger. In simple terms, a distributed ledger is a database held independently by each participant in a large network. That means every node on the network processes and records every transaction. Once there is an agreement among the nodes, the ledger has been updated and all the nodes maintain an identical copy of the ledger. This is one of the most fascinating parts about blockchain technology. Since all the data is maintained on the distributed ledger, manipulating or hacking it is almost impossible. For any change to be made, each and every node must be changed and a consensus must be reached, thus making it very secure. Now let's have a look at the price chart of Bitcoin. It was 7 cents when it was introduced in 2009, and right now in March 2018, it's $10,700. That's a massive increase. The adoption and acceptance of cryptocurrencies is rapidly increasing, and if it will become a regular currency is something we have to wait and see. But the technology behind it, the blockchain, is really fascinating and can be a solution to so many problems. For example, voting can be implemented on the blockchain, and every vote is stored in a public distributed ledger which cannot be changed or manipulated. Thus, using blockchain helps in bringing about transparency. Another major application of the blockchain is smart contracts. Smart contracts help you exchange money, property, shares, or anything of value in a transparent, conflict-free way while avoiding the service of a middleman. The best way to describe smart contracts is to compare the technology to a vending machine. Ordinarily, you would go to a lawyer or a notary, pay them, and wait while you get the document. With smart contracts, you simply drop a Bitcoin into the vending machine, that is, ledger, and your escrow, driver's license, or whatever drops into your account. More so, smart contracts not only define the rules and penalties around an agreement in the same way that a traditional contract does, but also automatically enforces these obligations. Let's say you want to buy a used car. You first get in touch with an agency, look for cars, find one, then verify the documents, the condition of the car, insurance, fuel efficiency, and then make a payment transaction, after which the car is handed over to you. This can typically take a few weeks. But by using the blockchain, all the information about the car and the related documents can be stored on the blockchain, and the transaction can be made through a smart contract without the need of any intermediaries. This can be done in a day or two. In the supply chain industry, every product can be registered on the blockchain at each stage, and once the data has been added, it cannot be manipulated or changed. The product can be later tracked and traced back to know the quality and authenticity. The blockchain thus has the potential to bring about transparency, speed, and revolutionize various industries such as automotive, supply chain, logistics, finance, and many others. Bitcoin is the one which brought about this technology, and its main purpose is to be a decentralized currency. But there are almost 1500 cryptocurrencies right now, and the coins apart from Bitcoin are commonly called altcoins. Each of these originated from different ideas and solve various problems. We will discuss about the popular altcoins in a future video. Recently, many governments and institutions have been trying to control and regulate Bitcoin, but its adoption has been increasing at a rapid rate. And the overall situation seems quite optimistic. Whether it will be widely used as a regular currency is something we'll have to wait and see. I hope you like this new format of videos, and please do give me suggestions for future topics to be covered in the comments below. Signing off, Nikhil from amazedhd.